So this is my second in a row of a report on what I'm expecting for next week when it comes to Tesla and the macro. If this is useful to you, please like and please comment below. I'll continue to do this every week as long as people think it's valuable. If it's not valuable, then I should try something else that you'll think is more valuable. Also looking for your comments just in general about what I'm going to talk about today, and looking for more folks to join Patreon. Had a couple of new folks join over the weekend, so looking forward to getting that number up to about double what it is now so that we can really start some action going there. Of course, we do put up videos early. If you want to see what I'm going to be talking about 2 days from now and you'd rather see it today, then you can check out and join Patreon. All right, let's dig into it. So I think the place to start with this is the Cathie Wood report. And I've already done a video on the Cathie Wood report. You may want to look at that video. I did it on Saturday morning. You can check out in detail what Cathie went over. I thought it was, as usual, an outstanding analysis of where we are in the world with regard to the macro and also with regard to the future as we look towards all the disruption that's going to take place the rest of this decade and into the 30s. So I invite you to check that out, but let's just take a quick look at what came out of last week with the Fed as well as with Cathie. And so let's just look at some of the numbers here. Number one, employment was very, very bullish. In general, my attitude has been changing over the last several weeks, and it looks like the Fed's attitude is changing also. I don't think we're going to be seeing a recession. I think we may see a flat to slightly up a couple of quarters. Maybe it'll be surprisingly up. I don't know how you get a recession when you have 1.9 people 1.9 jobs for every one person that's looking for a job, when people that are being laid off in droves from the tech company are getting jobs within a couple of weeks and sometimes better jobs than they left. I don't know. And when you have 500,000 people, 517,000 people that got employed in the last month, it's really hard to see where the recession is going to come from. Recessions are caused when people don't have enough money to spend and the economy contracts as a result, or when businesses, sometimes you have a business contraction that has nothing to do with the consumer, but I would think it looks like even though inventories are still up a little bit at retail, that inventories are not horribly out of balance at this point. So I think companies are going to be spending on inventory, and I think they're really going to be spending on automation because they don't have enough people. There's only one answer to, well, there's two answers, as I talked about in the video I did about Cathie. There's two answers when you don't have enough people to work for you. Well, three. I'm sorry. I'm going to change my mind one more time. Three. You can raise the prices and or spend a lot more effort to try to get the people you need. Number two is you can automate, and number three is you can offshore. All three of those things are happening, but I think one of those will be a great emphasis over the 2023 period of automation. If you have the employees having plenty of money to spend, and you have the companies spending money on automation, and you have no inventory shortages, and then I go into some details on real estate as well. I think real estate is done with the downward trend and should start going back up again. I don't expect to see big drops in lease rates. The Fed may be disappointed in that, but it may be that at least they stabilize a bit, and that might help the Fed make the right decisions downstream. The bond market has decided that the Fed is wrong. They've continued, actually, it's not even that they decided, they've said all along that the Fed is wrong. Inflation is not at the levels that the Fed thinks it is. And so the bond, the 10-year, continues to be at 3.5%. It is slightly up over the weekend, but nothing to shout home about. So I'm saying that we continue to have a bond market that is going to perfectly happy to lend money at rates that governments and companies can't afford, and that probably these bond rates and the Fed rates will be coming down over the course of this year. So all that's very positive. The market right now, the last time I'm checking here, which is 350 in California, The pre-market is suggesting that it's going to be kind of flat, slightly down, but I'm thinking it's probably going to be flat. Crypto is down a little bit, but that might be a response to being so high, having gone up so much in a short time. I'm expecting that from some of the go-go companies. I think there's a chance we could see a cooling, which could affect Tesla. I'm not a stock picker. I am not a financial analyst. I am not a technologist. I look at the fundamentals, and I'm mostly concerned about long-term. I do own some Leaps. People have been asking, Randy, what are your investments? I have a very small amount of money in Leaps because it's fun. Some 2024, June or July of 2024 Leaps, out of the money Leaps, cheap. You can get in for nothing, especially right now. And these have huge potential upsides, and last week made substantial amounts of money. So I think there's every reason to believe that my Leaps are going to do well long-term, but they could not do so well over the course of the next week or so. At some point, I think what we're going to see is Tesla and the go-go stocks are going to need to correct. Maybe Tesla won't, and the rest of the go-go stocks will. Maybe there'll be a divergence because Tesla is so strong right now. But I think there's going to be a pullback. Having had a couple of discussions over the weekend about this, I'm playing around with the idea that Tesla goes to 240, drops back to 200, goes back to 240, and maybe tries 220, and then anyway, something like that. I don't think it's going to bounce back with a 50% correction at the 200 level back to maybe 150. I just don't think that's going to happen. So that's me, and I don't know what I'm talking about. Okay, so I'm just telling you how I see it, and do your own homework, make your own judgments. Okay, the biggest thing, oil continues to be down. That's another factor that's causing me to think that the economy is going to have a very nice slope over the course of 2023. The biggest flies in the ointment right now, consumer credit is way up. People are putting money on their credit cards, and consumer savings are way down, right around 3.3%, which is historically low. Average around over many years is around 8 or 9% in the United States. So this is a little worrying. That's going to have to correct. At some point, consumers are going to have to pull back a little bit on consumer credit and are going to have to start saving again. Not 100% sure how that's going to work out. Again, a weird economy that we're in right now. Nothing like it that I have ever experienced in my many years of watching the economy. So I'm hard pressed to. I do know that it can't get much higher. The consumer cannot continue to put credit debt at these levels, and they cannot continue to save at these low levels. So there's going to have to be some moderation in that. This week, there's hardly any interesting things going on in terms of reporting or earnings. I mean, there's like zero. Spirit Airlines, I think, is the most interesting earnings report this week. As far as reporting, we get consumer confidence. I forget which day. Yeah, that's it. We get and the consumer confidence has been so-so, around 64, but going up. So it will be interesting to see what the consumer is saying, especially with what I just mentioned about how much credit debt they're taking on. So I could imagine a little moderation there, but maybe not. Maybe that'll continue up since so many people are employed and they're getting more hours. So they're earning more. So maybe that's how it balances out, is earnings will start to take care of the problem. Okay, the only other thing happening this week that I think we need to take a look at is the President's State of the Union. One of the things he may want to talk about is the balloon, which is on everybody's mind. It's like all the headlines are about the weather balloon or the spy balloon or whatever the heck it was. The market doesn't seem to care. As I mentioned, futures are about flat, just a little bit down. It does not appear that the futures were terribly concerned about the communist Chinese weather balloon or spy balloon. I guess they have divers right now trying to recover the balloon and the contents so they can find out what it was really monitoring. Maybe we'll find out that it was really spying. Maybe it'll really look like weather. Who knows? But it does not look like it's affecting the market. The president will probably take a lot of credit for the economy being pretty strong. And guess what? I'm not a fan of the president. You may already know that. If you watch this channel, you probably know my politics. I am not a fan of this president, but I'm a way bigger fan of him than the potential vice president. So please don't do anything to get rid of this current president. But having said that, I'm not his fan. I have to say, I don't think it has anything to do with him, but the economy is in pretty good shape, in my opinion. I could be wrong, and it could really be in worse shape and could be headed downhill for I've been wrong before. But he will take credit. He'll take a lot of credit for where the economy is. He will not talk a lot about inflation other than to possibly mention that it seems to be heading in the right direction. It's always good to watch the State of the Union address and see at least a little bit about where the president is focusing, what his priorities are, and how that plays out in terms of the market reaction to it the next day, et cetera. So that's like the major thing of the week in terms of news to watch for. There's obviously always news breaking that we can't predict. So that takes us to Tesla stock. I mentioned that I think that there will be a continued up and then some movement within a range, kind of in a normal pattern. The way that maybe doesn't happen is I think the story is being repaired. Tesla is a story stock. Tesla went up to $1.2 billion in valuation because the story was intact and a lot of people were buying into the story. There was clarity with regard to the velocity of the ramp, the amazing margins, the factories being built all over the world, the ramps being successful. But then all of a sudden we had a crimp in the story. I think there's a big part of the dramatic fall last year was that the story started getting holes. The last part of the story to get a hold was that there was a demand problem. Well, maybe there was, maybe there wasn't. Time will tell us how much of a demand problem there was, but that was a hit to the story, a big hit to the story. There was the other hit to the story was that the battery ramp wasn't going very quickly, and maybe it's going fine. We don't really always get to know what they think is fine, what they don't think is fine, but the ramp is happening, but it certainly wasn't happening as fast as retail investors and the street were thinking it should be happening. So that was a hit to the story. Then we had the Twitter purchase and everything that was around the Twitter purchase and Elon selling shares. That was a hit to the story. Whether or not Elon took 5 minutes away from Tesla that mattered, it hit the story. I don't really care. I don't think that the market really was concerned about whether Elon is liberal or conservative or in the middle. There might be 12 people out there that didn't buy a car because Elon is more conservative than they thought he was. I don't think it really, really matters. But there was an ongoing hit to the entire story. And that hit to the story is, I believe, what drove the product down, drove the stock down. So I think that the story is being repaired. I'm going to do a video on that, probably be out tomorrow in terms of the story going forward. What is the story going forward? What does it need to repair it to where people are believers again, wholeheartedly invested and involved in the story? What's that going to take? And as the story gets better, and I think it is right now, the stock should return to at least the 300 level, which might have been a more realistic number in the past, and then eventually, I believe, get to 400 this year. And the reason it'll get to 400 this year is because the company is twice the size it was when it was 400 the last time. So it is conservatively worth 400 at this point. And I think that'll happen this year, but the story needs to be repaired first. And hopefully the economy will be doing well enough that risk on mentality can come back to the investing community, and that will also help to drive it higher. So I hope that's helpful. Is there something I left out? Is there something that you'd like to know that I've researched that I should research next week that you'd like me to report on? I'm going to try to do this every Sunday night so that it's available to you before you have to make some decisions on Monday morning. I don't want you to make any decisions based on what I say, other than I need to do some more research. Not I, you need to do. I'm hoping that you'll think to yourself, quote, I need to do more research on what Randy just said so I can make my own decision with regard to my investment ideas next week. I'm not an investment advisor. This is for entertainment purposes only. Do your own homework and all the other disclaimers. If you like the content, though, if you'd like to get more like this, as I mentioned in the beginning, please let me know that in the comments. Is this useful? Was this helpful? Do you want more like this? And how can I change it to make it even better? And I'm looking for, of course, more people on Patreon. So it's been great talking to you.